how is the relative value investing different from deep value or traditional value style of investing?
If I look at a traditional value style of investing, it focuses on absolute cheapness. Like, say, for example, a stock trading below 10p, a stock trading at 5% dividend yield, a stock trading below book. Whereas the relative value looks at how the valuations have moved over a certain time frame and whether it is cheaper with regards to the longer term time frame. Now, the absolute value or the conventional value used to work very well in an environment where there is an information arbitrage. Like, for example, 50 years back, a lot of these documents were not publicly available, like, for example, an annual report or management meetings. So investors who had access to those probably had more information than others who did not have access. Whereas in today's environment, any of these documents, such as annual report, earnings, or any interviews, are publicly filed in the company websites as well as in the stock exchange websites. Hence, there's no investor who doesn't have information on those companies. Our belief is that if certain stocks are trading at cheap valuation of, say, a 7% dividend yield or below 10 times price to earnings, then there is a reason for being so. It generally does not qualify as a value. On the other hand, when we look at relative valuation, we have a certain minimum filter of quality that we do, and over and above that, we look at a relative valuation, how the stock is relatively poised over a longer time frame, either with regards to its own history or with regards to the market, as the case may be.
Does UTI large and mid cap fund follow top down strategy for sector allocation or market cap allocation?
To some extent, in terms of the large cap allocation, the fund follows a sector strategy, because we do observe that in a lot of times, a sector typically tends to trade at a discount to its long term valuation, either on account of some short term concerns. And that's when, we find very good opportunities across the sector. And that's where we take an exposure based on the sector. On the other hand, if you look at the mid and the small caps, these are more bottom up and not necessarily driven by sector, where we try to find individual stocks fitting our investment criteria in terms of either in case of mid caps being growth oriented, available at reasonable valuation, and the same holds good for small cap as well. So we do a blend of both while we construct our portfolio. Thanks everyone for watching this video.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.